It still seems to be an economy that's hotter more so than it is cooler. Where is the evidence that a rate cut would be necessary anytime soon?
Well, let's start with the manufacturing, because President Biden has really put a big push on trying to reinvigorate American manufacturing and the auto industry, making sure that, as the global economy recovers from the pandemic, and shifts happen in terms of what jobs are where and who's doing what, that U.S. manufacturing workers don't get left behind. And you see that in that kind of data that shows expansion in manufacturing. From the Fed's perspective, I will tell you, I'm going to say the same thing I've been saying for several months now, that it's going to be a longer, more painful wait for the Fed to cut rates than many market participants are hoping for. And the reason is the asymmetry of the risks that they face. If they cut rates too soon and they can't get inflation down a little bit more because they're really still trying to hit that 2% target, they could be faced with a decision to increase rates again. And nobody wants to do that. So they're going to be slower before they cut so that they know once they cut that that's a cut they wanted to make. They can always hurry up and cut rates. They can always cut rates more steeply than, if it looks like they waited too long, right? What's the reaction? If they wait too long, then they cut rates sharper and more quickly. If they cut rates too soon, then they face the risk of potentially having to increase rates, and no one wants to do that. That's what I mean when I say that the risks are a little imbalanced. They have an easier path for correction if they wait too long than if they don't wait long enough.
Yeah, your point is taken on the kind of asymmetric risks here. So if the idea is that they might wait too long, or potentially they would rather wait too long than move too early, in theory, that would be because cracks are starting to show up more materially, specifically in the labor market, which you focus on. Are you seeing any early indications, Betsey, of that happening? Do you fear they may, in fact, wait too long, or is this labor market just too strong to actually still be feeling the effects of what's ongoing tightening?
I really think this is the tough part of the Fed's job, because the labor market is slowing. It has to slow. It couldn't continue to grow at the rate it was growing in 2021 and 2022 unless we open the borders and allow more immigrants in. There simply aren't enough American workers to take jobs at the kind of growth rate that we have seen. And we've all been predicting a slowdown in the labor market for over a year now. And we have seen immigration growth that has allowed us to maintain a really rapid pace of job growth. But we do see some signs of slowing. We don't know that it's slowing too much. We need it to slow to something that's stable. And so I think that's why it's going to be so hard to gauge this. They're seeing signs of slowing. I'm seeing signs of slowing, but I'm not seeing signs of slowing so much that it would warrant them cutting rates before the job of bringing inflation down is done. And that's really the sticky point here, because there's a lot of people, even the people who said the Fed wasn't raising rates quickly enough when we saw signs of inflation, are saying, boy, real rates are quite high right now, given how far inflation has come down. Maybe they should go ahead and cut. But I think the Fed's worry is this last sort of little tiny bit of the journey to get inflation down is going to be the toughest. And so you really do want to wait unless you see signs that we're getting into trouble. And I'll definitely say right now, I see no signs that we're getting into any kind of trouble.
All right, Betsey, I want to return to something you just mentioned there, which is how immigration factors into what we're seeing in the labor market and, frankly, the economy overall, because we talk a lot here on Balance of Power about the politics surrounding the border in migration. Certainly, this is one of the hottest issues, at least in this election cycle. How should we be thinking about the economics, though, of the migration we are seeing? What impact does the flow of migrants over the U.S. southern border have ultimately on the U.S. economy? Is it a net positive or a net negative?
Well, first of all, I want to distinguish between something you just said. You started talking about immigration in general.
Versus migration, point taken.
Like, let's talk about the southern border. And I just want you to know that it's, even if we're only talking about people who enter the United States without the correct documentations or undocumented immigrants. Most of them don't come across the southern border. Most of them are people who overstay their visa. So, that is a problem. And I know it's one that, creates a lot of attention. But I think we also need to realize that, this is cliche that the United States is a country of immigrants, but it is. And we have built this country based on new ideas and more people coming through. And frankly, I think a nice flow of immigrants into the United States actually gives us something that's incredibly important for domestic workers as well, which is a dynamic, evolving, and very thick labor market that allows people to move. Sometimes research has shown that sometimes immigrant labor can help, and a Native American, someone who's been here for, was born here or it's been here for a long time, open their own business because now they have people to hire. Or it can help a woman hire childcare so that she can go into the labor market, or a parent of either gender hire childcare so that they can go into the labor market. It's all connected and we support each other. The more people there are coming in, the easier it is for the economy to be dynamic and to continue to grow. And this idea that immigrants are taking from us, that it's a zero-sum game, it's just wrong, and it's based on fears. And it's very frustrating when people try to capitalize on those fears, because the reality is we've had a great economy over the last year. And some of that really has been only because we've had people returning to the United States after COVID, when we had a lot of people leave.